diversified one, and return ratios are good as well. So explains why that one's up and about.
Okay, first stick on the Nifty is in the green. It's opened with a gain of about 40 points, 45 points now up. The Nifty is at 25,560 in early trade. One level to track will be yesterday's intraday high, 25,670, but we're still quite far away from that. So it's a quietly positive start to begin trade with. The mid-cap index is up close to about 0.25%. The advanced decline ratio is positive. The Nifty Bank 2 holding up in the green, so that's tracking a minor gain. In terms of the big sectoral gainers, realty is up. Healthcare is up nearly about 0.5%, and the defense sector too is mirroring some strength. The top gainer is Apollo Hospitals following the news flow. So Apollo Hospitals 3.5% up. Paints are higher today, so Asian Paints is a positive tick. So there are only two stocks which have more than a 1% gain. Apollo Hospitals 3.5%, Asian Paints up 1.2%. A couple of the other pharma names are also higher in trade. So add Dr. Reddy's. BEL continues to gain ground, was one of the big movers yesterday. Today it's up another 2.5%. Geo Financials has been showing some strength, and some of the IT names are higher. So HCL Tech and Reliance Industries has opened in the green. The gains are not much. Trend reverses some of yesterday's big moves. Bajaj Auto, on the back of the muted June sales numbers, is subdued 0.5% lower. And some Bajaj Finserv, Axis Bank on the financial side are a tad bit muted. Titan 2 has got a cut of close to about 0.5%.
All right. Well, the stock that's reacting negatively to the price cut is NMDC. The price cut is larger than what the street was working with. So that explains why that one is knocked back. Coromandel International, well, that's coming for some cooling off. Yesterday, it had a big run. We'll keep an eye out on that stock. It's down 2.5%. Let's see whether the dip gets brought into. So that's going to be important. Other couple of stocks, you have Home First Finance. That's down close to around 2.5%. in trade as well. Sigachi, yesterday the stock was under pressure. There's a disruption at one of their plants, unfortunately. So that's why, in fact, that one's down close on 6% following up yesterday's cut. What's doing well? Gabriel. This morning I had highlighted the stock of the day could very well beat Gabriel. The few reasons are it is EPS accretive to a large extent with regard to the rejig that they've done. The return ratios of the entity that's going to be merged with it, in fact, is much better. Margin profile is better. And from being a mono-product company, they're going to be a diversified company now. So that's why that one's up and about, following an 18% return in the last 5 sessions, another 20%. So that effectively is up more than 40%. What else is up? Prime Focus, firing away as we speak. And I think Diffusion Engineers, there was a small, small order bin out there, but the street likes it. That one as well, up close to around 5% as we speak. A good start.
A good start. 3 stocks in the green for every stock which is in the red. And right now, the stock of the moment has to be IDFC First Bank. Nimesh has highlighted, a brokerage note coming by in a standout brokerage segment. And that stock is up around 4%, piling on the gains that we're seeing this morning. Ireda also came up with a decent update. That stock up around 2% odd. On the way down, a negative brokerage view coming in on Dixon Tech. After an up move that we saw yesterday, the stock is giving back some of those gains, so currently lower. And in the broader markets, Raymond, a stock that did extremely well in yesterday's trading session, continues to do well today as well, opens with a 5% gain straight off the bat. Will be very interesting to see where the listing of Raymond's realty business settles today. And we have Gulf Oil Lubricants as well, which continues to do well. So we are seeing that stock up around 4% in the morning as well. Asian Paints, we spoke about how ICICI Securities has reversed their 4-year negative stance on the paint sector. Asian Paints is now up around 1.8%. And Berger Paints is the other one, which is mildly lower, but yesterday towards close had moved to the high point of trade. So where this one goes is something that we will be tracking as well. But the top loser is on account of a brokerage note in the F&O space. Dixon Tech down 2.5%. The top gainer on account of a brokerage note is IDFC First Bank. Everything in the middle, way more green than the number of stocks which are in the red.
Okay, let's take the conversation now to Venugopal Mangat, Chief Investment Officer Equity at HSBC Mutual Fund. He joins in with his thoughts on the markets and the way forward. Thank you very much for joining in. This is Rima here. So let's first start with the, top down. Now, as we enter the second half of the year, what are the big bets that you have at HSBC India? And are you fully invested in equities now?
Good morning, Rima. Thank you for having me on the show. Yes, I think we have always remained almost fully invested. We've never used cash as a strategy. So that's the first point. On a top-down basis, I think the markets are looking, or the economy is looking much better now. The second half of last year, we saw a number of factors turning negative, including the capex from the government side. I mean, this is the first half of financial year 2025. And then, the liquidity pressures that we saw, the regulatory pressures for lending, especially to unsecured on the unsecured side. All of that actually resulted in the overall economy slowdown, and from there we've actually come a long way. I think the capex numbers are very strong now. Government capex has picked up very strongly. If you look at the March, April, and May numbers as well, I think it shows a very significant pickup. We have seen a complete change in terms of liquidity from a deficit to a surplus, and more to come with the CRR cut. We saw a 50 basis cut in interest rates as well, which is yet to be fully transmitted into the system. So we think the stage is set for better growth on a top-down basis. We currently are working with the 6.5% GDP growth estimate, which is what the RBI has also projected. But my sense is it could surpass that, given all of these factors. And as we go into the second half, hopefully there will be some clarity on the global side as well.
Right. Venugopal, growth is a function of the capex. It's a function of consumption. It's a function of what the government spends are, and it's a function of the exports. On all those four fronts, where do your preference lie? Because you did believe that capex is coming back. Would you play this growth via capex-related stocks, or do you look at the other functions as well?
So I think the last 2 or 3 years, we've seen capex and investments leading the markets and being a big driver of growth for the economy as well. We've for some time believed that consumer discretionary and consumption will pick up. We've not seen numbers yet or data yet to show that or reflecting that. But our sense is that with the tax incentives or the SOPs that have been given in the budget, plus the liquidity, the easing of regulatory regulations on lending, and the transmission of lower interest rates over time, all of that will lead to consumer discretionary picking up towards the second half, meaning the last quarter of this calendar year. We should see the data also coming positive. In the shorter term, I think the investment related sectors, the capex related sectors, will have to take the continue with the run. I think that's the single biggest driver at this point in time, given that consumption will take slightly more time to really pick up from the bottom that has been made. We strongly believe that going into the next financial year, consumption will be a key driver of growth, which is the non-staples part, which is the discretionary consumption piece, whether it is retail, whether it is automobiles, whether it is multiple other sectors, including QSR, etc. It could start with the low-ticket consumption items first, and then over time move into the bigger ticket, automobiles and housing, etc. So that's the way we see the progression in terms of sectors and growth in the economy.
All right. Hi, Mr. Mangad. Good morning and good to see you in. Good to hear your thoughts as well. Everyone's talking about better macro setup. However, the credit growth has been a little bit worrying, right? I mean, you'd want better credit growth. Are you worried, or do you believe the triggers are in place and credit growth will recover to say 12-13% by the time we wind up this year? Your take?
Yeah, we were worried earlier. A couple of months ago, we were really worried that, credit growth is weakening. And I think I spoke last time we met, or I was on the channel, I spoke about that. It was quite sluggish at that point in time. But now with the liquidity enhancing measures from the central bank, the surplus liquidity at the moment, the CRR cut announcement, all of this should lead to an easing of pressure on the banking system. Deposit growth has now surpassed credit growth for the first time in multiple months, and in May now. And with the CRR cut of 100 basis points, eventually over the next 12 months or more, you could see a significant, injection of money into the system, about 230,000 or 250,000 crores. and that with a multiplier should impact or help the credit growth to pick up. So we believe by the end of the year we should clock again a 12 to 13% credit growth in the system.
What about IT? Now, IT is still trailing. It's still about 15% away from its highs, while the Nifty is almost there, just a couple of 100 points, couple of 100 points here and there. Now, IT stocks are entering a seasonally strong period. Q1 and Q2 is typically the quarter when growth rates pick up. And incrementally, we haven't seen too much by way of bad news. In fact, CLSA is saying that Infosys is likely to upgrade its guidance. So from 0 to 3%, they could increase it to 1 to 3% or 1 to 4%. Do you think there could be positive triggers for the Indian technology space in Q1? And tactically, there is any opportunity?
So I think the IT sector was impacted, with all the uncertainty, in the global environment, the expectations of U.S. Growth slowing down, U.S. economy growth slowing down, and the tariffs, etc. So that the whole environment turned negative, and even though I think the first quarter is seasonally a good quarter, like you mentioned. The expectation was this year given this uncertain environment, it would be quite weak. I think the consensus numbers and most analyst expectations are either flat or negative growth on revenue front. But the positive news, I think, is coming from the view is coming from the fact that so far we've not seen demand really fall off the cliff. I think BFSI is still holding up. The more impacted sectors are manufacturing and retail, which probably is slow in terms of decision making and on discretionary spends. But overall, I think the demand has held up till now. So in that sense, we might see some better than expected results, given that the expectations have been quite subdued. Having said that, I think the commentary again will have to be, we'll have to wait and watch and hear the commentary, because going forward with a lag, some of these could really impact growth in the US, and we'll have to take stock, when companies announce results and what their commentary is.
All right, Venugopal, thank you so much for joining in and giving us your view on the markets in the very near term. You believe that capex will lead the market, and thereafter you see consumer discretionary picking up as well. Still not pretty sanguine on the IT space yet, but you are picking some in the financial. With that, we'll take your leave and wish you a good day. Acme Solar, that's the stock on our radar on the back of their recent order win coming in from the NHPC tender. To discuss that and more other parts of their business in detail, Nikhil Dhingra, who is the CEO of the company, joins us now. Thanks a lot, Nikhil, for joining in. Just, on this NHPC order win, if you could explain to us the details. What is the capex? What is the debt equity? You get 30% via VGF, we understand that. How does the EBITDA accrual work for you? At what rate have you been given this tender?
Right. So this is the first of its kind win for us, wherein we have received this particular bid is coming from Andhra Pradesh, and it's a very unique bid because this is coming directly from the customer and not done by the SECI on its own or NHPC on its own. So it has a direct customer. So the PPA will be resulting in a very early timeline. And the other thing is there is no land acquisition time requirement or a transmission line requirement, because this will be housed in the premises of the customer. So in a way, it's a very much less time consuming and much less risky in terms of execution, because it does not include a land and transmission line. So in terms of the revenues, it will result in a revenue of around 60-70 crores and a capex of around net of VGF around 500 odd crores. So in terms of ROC, like we mentioned to you, we target a ROC of around 14-15%. So that is the threshold this project will also meet. The good thing is it will be done in a quick timeline of 18 months, and it will have a quick PPA because it is coming from the customer, and it has a much reduced risk in terms of the execution. It's more like a transmission project than a renewable project.
And at what rate are you likely to, supply this? At what contracted rate? Because your current portfolio is 3.5. You said that the incremental contracts will come at between 3.9 to 4.
So this is actually the metric here is it's a lease kind of a project rather than a tariff kind of a project. So it's a lease rental of let's say 210,000 in one project and 222,000 per megawatt in another project. So you can normalize it through. It will not be equal to that tariff in terms of 3.5 or 3.9, but in terms of the ROC, it is in the similar range. So whatever capital we are employing, it will be resulting in that much ROC. And tariff, you can also say in a similar range for a similar sort of capex.
What is the range, the ROC range?
14 to 15%.
So that means on 60 to 70 crores of capital, you will be making roughly 8 to 10 crores in terms of an ROC.
Like I said, on a 500, we will be making around 70 crores. Yeah.
All right.
So this 500 crore is annual, and you would accrue this over how many years? 70.
So this is one time, 500 crore is one time, and 70 is annual.
Annual. And that would be over how many years?
This is a project of 15 years.
Okay, 15 years. Can you give us some more updates on the kind of order wins or PPAs that you've signed in Q1, and what are the numbers looking like in terms of overall capacity as you would potentially exit FY26?
Yes. So we have a very good Q1 in terms of the PPA. In the last 15 days, we have signed PPAs of 600 megawatts. And of course, one of these PPAs, the project has also commissioned because it was a very unique methodology we followed. We built the plant as a merchant plant, but immediately post-commissioning, we transferred that to the PPA because that PPA required us to offer an operational plant. So it has given us very good realization. So immediate boost to our revenues, and of course, it has resulted in a successful strategy from, let's say, building the plant as a merchant with an existing connectivity and then migrating it to a PPA because that's our core business. In terms of the overall capacity, we are at 2890 megawatt operational right now and 4 gigawatts of bid wins. Out of the 4 gigawatt, we have 2.2 gigawatts of signed PPA now with this 600 megawatt we have signed in the last 15 days. And we have 1.8 gigawatt, which is to be signed PPAs as of now, out of which we are expecting these 600, 700 megawatt to be signed shortly. And of course, the rest of them to be signed in, let's say, a quarter or two.
Okay, got it. Hi, Nikhil. Good morning. Good to see you. And the other big concern for the industry, various industries, has been the rare earth availability. Is that an issue for your business?
Not yet. It is not an issue. See, we are using a lot of capex equipment. Most of it is Indian, but some of it is international. But like we are procuring lithium-ion batteries on a large scale, we have already closed some of the orders for that. So we have already closed purchase orders for most of the key equipments, and we are trying to do merchant battery also, right? Which is in a similar way we did the merchant solar I was just explaining. So our target is that we try and do it as early as possible because the capex is there are a lot of tailwinds on the capex side in terms of the prices of these commodities. So we are not facing any headwinds on that side as yet because some of these products, I understand that it is more on the components which require you to manufacture these products, not on the finished goods. So these hindrances are coming on more that, let's say, a motor or some such intermediary which is required to come up with a finished good, not on the finished good itself. So we are buying more of finished goods like the battery itself and not the intermediate goods.
All right. Nikhil, you all run the business. We here from the studios, we analyze various brokerage notes and we read up in the morning. And one notable note came in from Motilal Oswal earlier today. They have gone ahead and they have upgraded your stock and they're highlighting that from the time you listed, your capacity has moved from around 1.3 gigawatt to around 2.9 gigawatt. And they're complimenting you all on that because another peer that listed at a similar time didn't go at the same pace. So that's good on you. But a couple of queries here. as you're headed now from this 2.9 to 6.9 gigawatt, they are talking about FY29 being a big year for you. And at peak, they're saying you could do close to around 8,100 crores of EBITDA. Is that possible going by what all is on the board right now? Things could change, but visibility could be in that direction, 8,100 crores?
It could be. See, our business is not very unpredictable because we actually are forced to plan in advance because this is a very capex intensive business. So whatever we win, whatever we clock on the revenue and EBITDA is predicated by what projects we win, what sort of tariffs we win. So the only variable thing for us is the project capex and the project timelines, like with all infrastructure project. The good thing is, in our case, it has been quite predictable because there have been tailwinds in the capex, and of course, we do most of our execution in-house because of our in-house EPC. So in terms of the revenue and EBITDA, it is totally dependent on what projects we have. And at this point of time, like you noted, we have around 7 gigawatts of overall capacity. And bulk of that capacity involves a combination of solar, wind and battery. And that is why it has...
So Nikhil, in short point, you're saying is at peak, 8,100 crores is gettable, right?
So in terms of it is definitely gettable, and of course, as you move further into future, like you are moving into FY29, it is definitely gettable.
Yeah, this is what you had said to us earlier as well, that by FY30, you will look at 7,000 crores and significantly higher than that. Now, brokerages have done their back of the envelope calculations, come back with a number, and you believe that number itself is gettable. But, you know, that's about the EBITDA. Let's talk about the EPS and your balance sheet, because you currently have over 10,000 crore of debt on your books. I understand that a large part of that is on floating rates. So what would be your debt repayment plan? That's point number one. And secondly, how much would interest rates savings be as rates come down?
So it's a very big plus for us in the last 3 odd months. The interest rates are a big plus for us this year. We have been able to refinance at a very attractive rates of around 8.5% and lower for our operational plants. The rating in terms of the debt load up, it's a 20-year debt for us, and all the debt is linked to a particular project. There is no debt at the holding company. All the debt is on the projects. And our net debt is 7,500 crores, and our EBITDA run rate for this year is likely to be around 2,000 crores. So the debt is broken into 2 parts. One is for the operational assets, and another is for under construction assets. On an under construction assets, you don't have to, there is a moratorium of 6 to 12 months post operation of the project. You don't have to repay that debt till that time. And of course, you have to, then you get around 18 to 20 years post operations to repay that debt. So that's how you repay that. So even in terms of a debt to EBITDA of 4 to 5, right now we are closer to 4 than 5. It is very comfortable because you have to repay it in 20 years. And in terms of the overall maths, typically of an EBITDA around 45 to 50% is your interest. And as we go in the interest rate cycle, we are yet to get benefit of the base rates coming down from all the lenders. Most of our lending around, you can say, 60-70% is floating rate, and 30% as of now is fixed for us in terms of the overall. In this quarter, we did a fixed rate financing from Bank of America and Standard Chartered. So between fixed and floating, there is always a matter of interest rates and what's the key.
Yeah. All right, Nikhil, very quickly, we got that, sorry to come in there, but we've got the broad point, 70 to 80% is floating, 70% approximately is floating. Very quickly, at peak levels, what will your absolute debt look like? Because you've got a big capacity expansion that's coming on stream. And net debt to EBITDA, it'll hover around the 6.5 times. What is it?
Net debt to EBITDA will not cross 5.1 times.
5.1 times. Okay, and peak debt will be what?
Peak debt will be, let's say, when you say 7,000 crore EBITDA, it will not cross 35,000 crores.
All right, take that point. Thank you so much for joining in and giving us your view on the business. The street likes what you're saying. We've seen a smidge higher on the stock price as you joined in and gave us the outlook, the breakdown of the current deal that you've done with NHPC and your future capex plans as well. With that, we'll slip into a short break. But one sector which has been buzzing lately is the paint space. Today, Asian Paints doing extremely well. On the other side of this short break, we will discuss this sector with Manoj Menon, who is the Head of Research and Consumer Analyst at ICICI Securities, joining in our studio.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by Century Ply Club Prime, Raho Befikar.
Aim to transcend growth effortlessly. Wonder which market cap to invest in. These funds aim to blend asset classes for growth. Motilal Oswal Large and Mid Cap Fund invests in select large and mid cap stocks with minimum 35% allocation. Motilal Oswal Multi Cap Fund invests in select large, mid and small cap stocks with minimum 25% allocation. Motilal Oswal Flexi Cap Fund invests in select large, mid and small cap stocks without restriction. Think equity, think Motilal Oswal. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ.
Welcome back. Asian Paints, that's among the top Nifty gainers this morning. We've seen, the paint sector be in focus for the last many years because of Birla's announcement, but very few days in the recent days, we also had the JSW Paints deal that came by. This morning, ICICI Securities has upgraded the sector, Asian Paints and Berger Paints, after a 4-year negative stance. So to discuss this and more, the author of the report, Manoj Menon, joins in our studio from ICICI Securities. Manoj, thank you so much for joining in at short notice in our studios. You've reversed your stance after 4 years. I have to ask you this question. Did this reversal come after the announcement on Friday, or were you considering it before that itself?
Mangalam, practically speaking, it's very difficult to actually execute a report in 24 hours or 48 hours, right? So, look, I think we have been actually focusing on a lot of channel checks on this industry, apart from talking to a lot of our network checks, etc. And this view was coming, in our view. So me and my colleague Anirudh Joshi keeps discussing, what the inputs we have been getting. So 3 or 4 things to highlight. One, that in the last 12 months, Birla has already reached a dealer network of about 55,000, which is almost about 60% of what an Asian Paints has got today, right? For a market share which is less than 1/10. So assertion number 1 is that they have done the relatively easier part of getting the dealer. Now you've got to kind of get the throughput in, right? I'm not saying they will not, they will, but the big, let's say, low-hanging fruit is done with. That's point number 1. Point number 2, there has been an industry deceleration over the last 12 months, which we believe is short-lived. In line with the discretionary consumption uptick expected in the next 12 months, we expect paints also to get better. Second aspect is paint industry had a few one-offs also. It's a long conversation, but we have published 2 weeks back on what are those one-offs. Third aspect is paint stocks are currently at about -1 standard deviation. Point number 4, the margins also appears a 15-year low, and I can go on and on, right? I mean, so we have been observing a lot of aspects, and then the timing is just a coincidence, actually.
So why did you not then increase it to buy as against add? Because it's reduce, add, and thereafter it's buy.
That's right.
What will make you buy?
That's right. So simple one in a thesis, which a lot of my colleagues in the morning meeting just asked today, was that, look, I think we are fairly clear that the paint stocks have bottomed out, right? And that's why we got a sort of, let's say, an optimistic view on an add rating. Now, the difference between an add and buy is that when I look at the true medium to long term,
yes,
we also have a bit of a concerns about what the exit multiple which the paint companies should command. The reason being that, in the last 5 and 10 years, companies like Indigo Paints, whether it is Astral, whether it is a small, business in paints by Pidilite, and Indigo Paints, and as well as now, the current player, right, Birla, have actually proven that the consensus probably overestimated the entry barriers in paint industry, right? So it's not necessarily such a high entry barrier that is assumed to be 10 or 15 years back. So we are optimistic. But then, let me put it this way, the day when which we believe, based on our market checks, that Birla will grow in line with industry growth or a tad or a shade higher, maybe that's a time for to actually go for a, even more optimistic thought process.
How do you expect the market share to now settle between these top 3-4 players, say 2 years, 3 years down the line?
Yeah. If you look at the shares currently, right, Asian is at about 50, Berger is around 20, Kansai is around 10, 11. And assume for a minute that JSW Akzo goes through, the combine will be similar to Kansai, right? Then there is Indigo at about 3% and also Birla currently about a little more than 3%. We expect Birla Paints to actually to reach about 10% in about 3 years' time, right? Which also means that in the medium term, we also see a scenario in which there is going to be a tough fight for who is going to be the number 3.
Okay.
Right? Between Kansai, Birla Opus, and assuming JSW Akzo goes through, right? I mean, the 3 players actually.
Who do you think, though, going by what they have to say, Birla has been very, very confident in what they're saying.
Right.
And also in terms of profitability for Birla, because that's the one who's come in there and disrupted things. How do you see their profitability pan out from here on?
I think the profitability will take some time because there is a case study of Nippon Paints in Tamil Nadu going from almost 0 to 5% market share or even higher. And the day they tried to or attempted it to make it profitable, I really don't think they were able to hold on to the shares, right? That's the risk of any incumbent. I'm sure that the Birla Opus management I got a lot of respects for will be smart enough to understand this and appropriately align their profit expectations in the shorter term.
You know, what you said really is it echoes what a lot of the industry experts have been saying as well. It is easy to get revenue share, not as easy to get the profit share. The other thing that stood out is you said everyone's fighting for the number 3 player. This at a time when Birlas had explicitly said that they are likely to be the number 2 player. We spoke with Berger on Friday and they also said that number 1 and number 2 are going to stay no matter what happens. The fight will be among the number 3 players itself. In fact, what we'll do is we'll continue this conversation. Let's hear out what Abhijit Roy had to say to us on Friday as soon as the JSW and Akzo Nobel deal was announced.
Changes much, because these 2 players, as you rightly said, have been there in India already. Both JSW and Akzo have been operating in this market. We are more or less aware of their strengths and weaknesses, and we know what they are doing in the marketplace. So it's just a change of hands, possibly a change, in the management style that it is operating in. So from that perspective, there might be some small changes, but overall in the industry, nothing changes much. What does happen is that there is a consolidation which is happening now. So there are now 5 players in the industry. The top 2, Asian and Berger, remains. The 3rd, 4th, and 5th position is up for grabs, and that's where the competition will be intensifying a bit. Between Birla, JSW plus Akzo and Kansai.
All right, so that was the management of Berger Paints saying that they are not very perturbed by this development. Both these players have been in the market in the past and they are very well versed with their competitive strategies as well. We are discussing the paint space with Manoj Menon. Manoj, you've upgraded your stance to for Asian Paints and Berger. You were always positive on Kansai and Aerolac, and you were also one of the few who had coverage on Akzo Nobel. With this deal going through, what do you view on Akzo Nobel from here on?
So look, we have always viewed Dulux as a brand, having far higher, I would say, awareness versus availability. Or put it simply, it's been a legendary brand, but not necessarily has got the, let's say, the care and investments which probably deserved in the last decade, thanks to probably the scenario which an Akzo Nobel NV was going through, right? Not necessarily enabled to invest for growth, etc. And we strongly believe that, with any group, now including JSW, who may have a willingness to invest for growth, right? Dulux can recover quite smartly.
So do you think they have the capital to invest for growth after having paid what they did for this business? And at the same time, one thing that stands out in the paint industry is that everyone has very clean balance sheets. Right. There will be a company that will start off with a fair amount of debt on their books. So how much elbow room will they have to further invest? And JSW Paints has been around for the last 5 or 6 years. They haven't crossed 2,000 crores in sales, right, and they haven't crossed more than 1,200 crores in organic sales. So what makes you confident that they will be able to grow, Akzo Nobel the way it deserves to be?
So 3 things actually. If you look at Akzo Nobel India currently, right, the current listed entities P&L account, it has got one of the highest gross margins and one of the lowest EBITDA margins. So assertion number 1, that it's a case of corporate overheads and the synergies, actually, or rather, the synergies playing out, right? Second point is actually that Akzo, India used to pay around 3.5% royalty to the parent. After the deal, the brand is going to reside in Indian entity, so that royalty is also a saving, right? Point number 3, we do strongly believe that there is going to be SG&A savings as well. So let's say, while I don't have a number, whether that 15% reported margins will settle at 20, 22, 23, I don't have a published view on it. So there is a scenario that it will be higher than 15, right? Which essentially means that under the new combine, there is going to be enough resources to invest for growth. And now that honestly depends on how much JSW wants to, what are the big game plans, etc., for the paint outlook, what they may have.
Okay, just one quick final question. Now, this target price that you've raised, 2,700 for Asian and Berger, it's about 650. Is it a valuation reset? Because you said valuations are below standard deviation. Yeah. Or have you materially increased the EPS estimates too?
No, actually, if you ask me, we're not really touched the EPS estimate by, materially. It's still, honestly, if you ask me, next couple of years, if you look at the EPS estimates, rather the CAGR, it's still single digits. Right? Okay. No, honestly, not exciting. That's the reason it's not a buy rating, right? It's an add rating. But what we genuinely believe that from -1 standard deviation, we are essentially leaving the worst is behind. Time to actually, let's say, for example, in the last 12 months, 24 months, we would have advised investors saying that, look, you don't have to own Asian or Berger. We are changing that stance to say that at least you should not be underweight.
All right. All right, take that point. Always a pleasure speaking with you, Manoj. Thank you so much for joining in and giving us your view on the sector. We await a longer conversation on the entire consumer space once you return from your Japanese holiday as well. In case you need any tips, Rima was just there, so she'll help you with all the travel plans that you need.
Have a good one.
Have a great. Thanks so much for coming down. Moving on, we've got the management of Titagarh Rail now joining us in the studio. They won an order worth about 430 crore rupees from the Maharashtra Metro Rail Corp. So to talk more about this order win, Umesh Chaudhary, Vice Chairman and Managing Director at Titagarh Rail Systems, is now with us on the show. Umesh, thank you very much for joining in. Always a pleasure to have you. So first, tell us a little bit more about this 430 crore order win. When will the revenue start accruing? What will be the kind of margins? And what would your order book now stand at?
Yeah, good morning, Rima. It's always a pleasure being with you. So thank you very much. It's a significant order win for us because it's a repeat order. It's an extension of the existing contract. So as you are aware, the Pune Metro contract was our first metro contract that we had signed in the country or as a company. So we've delivered the initial trains, and this is an extension order that we have got for 12 more trains that will be used in the existing network. So that makes it more significant. And this is also the aluminium metro, so an extension of the aluminium metro facility that we have created in our facility. The execution will happen within 30 months. So we'll start the first train in 2 years and complete it in 6 months thereafter.
And your order book, what would it stand at now?
So the order book is, if we include our share of the joint ventures or the consortiums that we have got orders in, it comes to about 24,000 crores. And in terms of the number of coaches of Metro, we are executing, of course, the Gujarat, the Bangalore through CRRC, and now this one.
All right. Hi, Mr. Chaudhary. Good to see you in, sir. Could you break down the margin profile, between mainline, metros and export contracts, if you could give us a rough sense?
So I would rather break it down in my FRS and PRS segment, which is the freight rail segment and the passenger rail segment, because that's how we account for. And in the freight rail segment, we've always maintained that we are at a margin level of around 12%. In the passenger rail segment, the normalized margin would be around the same, about 11-12%. With the caveat that till we are able to achieve a certain break-even point, if I may, of course, the margins are slightly lower. The last quarter, we were able to ramp up the margins to about 8-9%. But as soon as we are able to touch the number of production of coaches at about 15 coaches to 20 coaches per month, we should be at about 11-12% of margin. And then the margin enhancement comes when we are able to integrate our propulsion, which will take another maybe 1.5 to 2 years' time. That would hopefully take up our margin to between 14 and 15%.
All right. Mr. Chaudhary, Mangalam here, you've been talking about the execution gap narrowing between PRS and your freight business. If you could give us a sense of your order book composition right now, how much is passenger, how much is freight? And over the next 2 to 3 years, how does your execution break up, stack up? Because that will be much more margin accretive for the company. That's the story, right?
Absolutely, absolutely. So as far as the order book is concerned, as I said that, total order book, including our share of joint venture, is about 24,000 crore. And if I split that, it is half and half. So half of it is direct orders for our company, and half of it is our share of the consortium or joint venture. So that's about 12,000 crore. And again, if I split it half and half, is the passenger in the freight. As far as the execution is concerned, the freight, we have been executing at about 700-800 wagons per month. And we have now a capacity of doing 1,000 wagons a month. But now the ramp up of execution of the freight will depend on the new order flow, which we are hoping that, the previous tender that was finalized about 3 years ago is now coming to an execution by the end of this financial year. So we are hoping that Q3 or early Q4, we should get new orders from the railways so that the momentum continues. But the real ramp up will happen in the passenger rail segment, where we have started our production of the Gujarat Metro and of the Vande Bharat trains. The first trains of Gujarat Metro will roll out in this quarter, the current quarter, and the Vande Bharat first train will roll out somewhere in the first half of 2026 calendar year. So effectively, if we look at both the order book ramp up and the execution ramp up over the next 12 to 18 months, it is going to be a much more steeper curve in the passenger rail segment.
In a value sense, can you give us a sense? Currently, what proportion of your revenue comes in from freight? How much comes in from passenger? And by the end of this year and by the end of next 2 years, how will that ratio change?
So in passenger, if we look at last year, the revenue was hardly about 10%. Less than 10% was the revenue from passenger, and 90% plus was in freight. In 2 to 3 years' time, we are looking at passenger contributing to anything between 50% or maybe slightly more than 50% of our overall revenue. So that's the ramp up that we are talking about.
Do you have any, since you have such a strong pipeline, so many orders are expected, are you planning to increase your capacity, any brownfield, any greenfield expansion?
Yeah, we are continuously doing that. So we started with a capacity plan in our passenger rail segment. So first is capacity expansion is primarily happening in the passenger side, because freight, we are at about 1,000 wagons a month capacity, and I don't see that we would really require additional capacity considering the overall market size at this point of time. But on the passenger side, we are ramping up our capacity. And as I said, in the next 2 years' time, 2.5 years' time at the most, we'll be at about 70 cars per month, give or take about 70 cars a month, which is a significant capacity. And we are continuously expanding on that. For example, with this aluminium metro contract that we've got, we have also decided to set up. Earlier, we used to buy the flat packs from Europe for making these aluminium coaches. Now we are setting up the entire line of production in Calcutta in our plant in Uttarpara. So all of this expansion is going to help us in streamlining our supply chain and smoothen up execution, and also improve upon margins.
Okay, all right. Very quickly, sir, what about the wheel set business? That's expected to commence in FY27. But on ground, will you still have a problem in the interim?
So wheelset has been a very big problem over the last 6-7 months, and it continued to be a big problem in Q1 of this financial year also, because the rail wheel factory was not able to supply wheel sets on time. But we understand that the wheel production this month onwards, July onwards, should get sorted out, because also the railways have imported some axles and so on and so forth. But coming back to our own joint venture with Ramakrishna Forging for the wheel sets, that is pretty much on track. In FY27, as you said, we would start production. And till that time, of course, we will be dependent upon rail wheel factory and imported wheel sets, as we have been dependent for all these years. And thereafter, we would be in a much better position to get the wheel sets from our own plant.
All right, take that point, Mr. Chaudhary. Thank you so much for joining in. Always a pleasure speaking with you. That is the management of Titagarh Rail Systems. Wheel sets won't be a problem in the next couple of quarters, though they have been a bit of a problem earlier. Going forward, passenger rail execution is something that will drive growth for the company going forward. From 10% turns to 50% of revenue. Thanks a lot, Mr. Chaudhary. Meanwhile, as we are, looking at the clock, moving towards 10 a.m., 3 important listings today. We'll keep an eye out on that. Raymond Realty. The base price has been close to around 1,000 rupees, so 30 seconds to go for that opening. We have Ellen Barry, the gas company, which has an issue price of 400 rupees per share, and Kalpataru, the real estate player, also listing at around 414 rupees as an issue price. So we'll keep an eye out on those listings. Those are visuals coming in from the exchanges.
Okay, moving on. State Bank of India has completed 70 years of its existence today. The bank's rise to the top has been marked by defining moments from the 1991 balance sheet crisis to the challenges faced by the fintech boom. My colleague Lata caught up with C.S. Shetty, the chairman of the bank, for this special conversation. Listen in.
Welcome to a State Bank of India special as the grand old bank celebrates its 70th birthday today. SBI is, of course, mini Indian economy, accounting for 20% of the country's bank credit, 22% of the country's bank deposits. 55 years ago, SBI was born when the Imperial Bank was converted into State Bank of India under the SBI Act. Since then, its deposits have grown, hold your breath, 25,500 times. Its profits in the latest year at 77,561 crores was 52,000 times what it was in 1955. When the nation is in trouble, it looks to SBI. At the height of the balance of payments crisis in 1991, SBI raised $1.6 billion through the India Development Bonds, and it repeated this feat again after a decade during the Pokhran nuclear test in 1998 when India faced sanctions. SBI personnel go on to head many other banks, Yes Bank included, and also staff the RBI and the SBI. There is a deputy governor over there. Most important, SBI has changed with the times. In its 50th year, the bank gave its younger competitor HDFC solid competition in home loans and actually won that competition. Today, with its YONO, it is competing with even fintechs. And on that celebratory note, may I welcome the birthday boy of the day, SBI Chairman, Mr. Challa Srinivasulu Sethi. Mr. Sethi, thank you very much for dropping into our studio on what must be a big day back home at SBI.
Thank you, Lata. It's a great moment for all of us. And I wanted to be in your studio to celebrate this occasion.
We are honored. We are honored.
And, I think the journey of SBI is also synonymous with the journey of India. I think to that extent, it's a great moment to celebrate.
Absolutely, sir.
Thank you.
Actually, when SBI comes, one looks at the future. And so will our viewers. So just give us an idea. What are the immediate targets you have set the bank?
I don't call them targets, but we believe that if you have seen the journey of SBI, it always reimagined its role and stayed relevant.
Yes.
So we believe in SBI that going forward, while we have seen a lot of disruptions in the last 70 years, the disruptions will be much more frequent and much more deeper. So how do you handle these disruptions coming in, particularly in terms of your business models, in terms of the service delivery, in terms of customer protection? I think we all want to focus making SBI ready for another maybe 200 years. Okay. This is what. So the center to this plan is our digital transformation journey. While we have, as you mentioned, the scale and we have the trust of the people, but the scale and trust alone will not make you the best and most preferred bank.
Yes.
So we would like to assure our customers and stakeholders that our investment in technology, digitalization will continue so that the customer engagement with us, which will be much more seamless.
Okay. Well, actually, would you say that in the journey, in the 75 years, the government and the regulators' attitude to SBI and state-owned banks has changed? I mean, first, PSU banks, after nationalization, were part of the fisc. There was financial repression. But in 1991, you all were listed. SBI was listed first. And after that, more recently, I mean, the CRR cut, there is no big danger in front of the country. Still, the CRR cut is given so that I think banks have a fair chance against mutual funds. Would you say the attitude is changing to give you all a fair chance?
See, the public sector banks are having a dominant market share.
Yes.
Some of them would have lost the market share, but they're I think they're all trying to...
Collectively 60%.
Collectively, we are the dominant players in the industry, which means that any initiative, either by the government of India or by the regulator, cannot be meaningfully taken to the economy and the general public unless there is a wider participation of the public sector banks. I don't think there is any shift in the attitude. But one thing I can definitely tell you that maybe for the last 2-3 decades, or definitely in the current decade, is that we are getting a absolutely commercial banking approach within the public sector banks, and what I call ownership neutral approach towards serving the customers, and that is getting reflected. Obviously, the CRR cut is not meant for only.
You're getting a level playing field.
Absolutely.
Okay.
Absolutely.
That has been the tone of the Reserve Bank, but I think the banking sector, that is public sector and private sector, have got a better deal this year with liquidity being thrown in and the CRR cut. How are you looking at this combo affecting your credit growth? I believe the finance minister also met you all. Do you think this year the credit growth will be much better? Last year, I think we are finishing at 9-10%, FY25. What is your sense of this?
Since our silent period started now, I can't...
I'm asking you about the sector.
We can't talk only about SBI, but I think in general, what are the preconditions for any economic growth? I think those things are being ensured fairly well in terms of ensuring that the system liquidity is adequate, and as you mentioned, CRR cut will add further liquidity to the system. Apart from the benefit of protecting the margins, which cost of funds are reduced. The other thing is that the upfronting the rate cut. These are all indications, signaling obviously is towards ensuring that the growth is on the higher pedal. I think this is
higher priority.
Higher priority, and the government of India's initiative of putting some extra money in the hands of the people to encourage the consumption by reducing the rate of taxation.
No, you give me numbers for the banking sector, sir. I know I don't want to corner you on your silent period issue.
The banks will definitely come back to the credit growth.
So you think we could do 13, 14? I don't know how well you remember the 2002 to 2004 period. Reserve Bank had cut rates from 15 to 8%. After the Pokhran, we had to raise our rates, and then Asian crisis, we brought it down dramatically. But credit growth didn't pick up for another 2 years. It remained at 10%. And then only in 2005, we see this 25% jump in credit. When it slows, takes time to grow.
Absolutely.
But now do you think it can be faster?
I think it is. Stage is set in my view, maybe a couple of quarters from here. One is the corporate credit has been a challenge for the last few quarters. It is mainly because they're all sitting on a
retained profit,
reasonable cash flow, cash availability to them. And I believe that a lot of brownfield expansion, which is undertaken by them, is being taken by their own cash. And that is also getting reflected. If you see the SME growth, we are all witnessing good growth in SME, which means that SMEs are basically B2B businesses, right? If the corporates are not giving the orders, they're not going to perform better. So which shows that the corporates are spending and also giving the orders to SMEs. But the next inflection point for the capital expenditure would have to come. One is most of them are operating at 75 to 76% capacity utilization. And a sustained consumer sentiment and consumption growth. It is not that it's not there, but I think people would like to see the sustained level of that.
You're saying that capex has not picked up, but it is looking set to pick up.
All set to.
Okay. What's your sense about margins? Again, for the sector, I'm not cornering you, because you're going to get this. The rate cut will take away your margins, but the CRR cut will give you back margins, and it comes with a multiplier. Yeah. Every subsequent deposit will give you some gain. So will you come back to your FY25 margins in 4 quarters, 6, or for the banking sector? Does it take 4-6 quarters to come back?
Most of the banks have indicated that it will be a kind of U curve for the NIMs that you will have. I mean, there is no rocket science in that. There's a lag of deposits getting repriced, whereas...
How much? Is it 2 quarters lag, 4 quarters?
No, I think we'll have to look at Q4 end state.
Okay.
And most of us probably would be sticking to our margins at the Q4 end state. That is what I can tell you now.
Okay, okay. I wanted to come to the, the SBI history itself. As you cast back 70 years, I guess you would have been at least for 1/3 of that.
More than that.
Yeah, more than that. Okay, 35.
37.
Half the history you have seen. Any one memory or any few things that absolutely stand out?
If I have to, of course, there are many things.
Yes.
SBI, there's no dull moment in SBI that I keep telling that. But if two things which we have to see from an institutional perspective, not from individual perspective, I think the liberalization has completely given a new paradigm for SBI. See, till that time, you're a dominant player. We still are a dominant player.
The deposit and lending rates were set by RBI.
Absolutely. And then you have new age players. Post-liberalization, you have new private
bank licenses.
And many things which have happened. My view, I think the watershed moment for banking as a whole and SBI in particular has been the post-90s.
Okay.
It has given both opportunities and risks. Risk of, we have completely had to remodel our risk management.
Yes.
That the global risk and your own internal economical risk which needed to be relooked at, while the opportunities were aplenty.
Okay.
So I think that is one. And the second important element, I think, for the country, globally, I think unprecedented COVID was another thing what we really learned many things. It was an extreme business continuity process ensuring, right? You can't have a better testing of your BCB preparedness.
That's right.
I'm very proud that SBI has come out extremely well in terms of our commitment to customers.
Oh yes, not just that. Look at the quality of the balance sheet. In spite of going through a period when people could not go to work.
Absolutely.
I guess you have a historic low in terms of net NPAs now, 0.5% or less than that.
Less than
that. That's quite a record. But since you say 1991, you all got listed in 1990, right? Now, will you use this 70th year to mark some listings? You already have 2 babies listed. Will more come?
No, the babies will, I think, have to still grow up. It will take some time.
Okay. The market is kind. You're not likely to use
not it.
All-time highs, very close. And what about SBI itself? You're not looking to use the market's good mood?
We did take the enabling resolution for QIP
that is why I'm
of 25,000 crores. I think while the timing is not decided, we have time up to March 26 to launch this QIP.
Okay. So, again, let me ask you to, cast your mind back. What would you say were the most challenging moments for SBI? When did you all spend sleepless nights?
So, I don't think we spent sleepless nights because of, I think, crisis management inherent to us. Yes, I do agree. COVID was difficult, not because of any business environment. We had to protect the customers who are visiting our branches and, more importantly, protect our staff. I think if you really ask me from a management perspective, that was the most traumatic period which we all have gone through.
Okay.
And probably none of us have taken a day off, except when we ourselves got infected by COVID.
And you can catch excerpts of this conversation all day today on CNBC TV18. All right, let's quickly just get a handle on the rates on the new listings. So the first one is Kalpataru. The issue price was 414. And I think it's had a fairly flattish, 8% up now on Kalpataru. So that's higher. The other one is Globe Civil Projects, where the issue price was 71. So we'll get that. That's up 24%. And I think Ellenberry Industrial Gases, which is a competitor in a way to Lin, that's had a very strong listing, 33% up on Ellenberry. And Raymond Realty, which is the real estate arm spun off from the Raymond Group. This would be the third listed entity from the Raymond Group, and that's open with a gain of about 5%. The base price was 1,000 rupees. Compared to that, it's an uptick of nearly about 5%. So good day, good start for all the 4 companies which have made their debut on Dalal Street today. For the markets per se, also very, very quiet, just holding up in the green for the Nifty and the Sensex by a smidge. I'll get into a break. On the other side, we'll invite Mitesh Thakkar back again on the show.
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो और फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना, ये सब एक ही इनाम की बात कर रहे हैं और वो नाम है पीएनबी। आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए पीएनबी लेकर आया है एमएसएमई लोन स्कीम्स जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है पीएनबी, वो भी बिना किसी झंझट। जट से पीएनबी का भरोसा, अब हर व्यापार होगा बड़ा।
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाइ क्लब प्राइम, रहो बेफिक्र।
Boss, I just saw Raghav walking towards the parking lot.
Movie date.
He's not going anywhere. My car is parked right behind his.
He's gone.
MG Comedy Fee, the street smart car.
वेलकम दादा।
वाह।
अरे भाई, ब्रेकफास्ट मिलेगा?
हाँ जी।
हीटर?
हाँ जी।
तो अब क्या सूरज लाओगे?
जहां सूरज वहां रोशनी और जहां विक्रम सोलर वहां खुशियों वाली सनशाइन।
Welcome back. Mitesh is now with us for a few trading ideas. 1 hour done since we started trade. Mitesh, what will you have for us?
Yeah. Well, I think the index hasn't been doing much, but the action is happening in the individual stocks. And amongst them, the one which I like, I have a buy on Dabur. Marico and Dabur both have rallied. Dabur has, been in consolidation. So buy here with the stop at about 482. Look for targets of around 500 plus. And the other one which I like is DMart, which has been a recommendation earlier as well. Now can be bought with the stop below 44.30 for targets of 45.60.
Got that. Though the mid-cap index has snapped that 7-day winning streak today, so it's mildly lower, 66 points down. It could turn any time, but the mid-cap index has a shade of red going for itself. Mitesh, in the frontline pack, it's Apollo Hospitals, and we'll get to Ekta to talk more about this reorganization. But Apollo Hospitals, technically, it's a fresh high.
Yeah. So, Apollo Hospital has broken out of a triangular consolidation a few days back and it's showing continuation. Today, there was a gap up and then we saw the stock kind of retreat from the intraday highs, which is slightly overbought. But if you get, levels close to about 7,400, I think that will be an excellent entry point. Eventually, I think the stock will top 7,800, 7,850 levels.
Thank you very much for that. Let's get to the stock of the day, and that's Gabriel India. The stock has a gain of close to about, it opens straight away, gap up close to about 20%, and now we should get that up for you on your screen. Hormus is now joining, still locked in an upper circuit. Hormus joins in with a fine print on this transaction that they're doing.
Upper circuit for Gabriel India. We spoke about this in the morning, that the reorganization that they are planning to simplify their group structure. Now, in their investor presentation, they've mentioned that as part of this consolidation that they are doing of the Anand's group Anand Group's auto and related businesses with itself. It will be done through a multi-step process. Now, first up, they will be merging the company called Ankemco into Asia Investments Private Limited, AIPA, and then the automotive division of the AIPA, which will include Ankemco and others, including Dana Anand, Henkel Anand, and ACYM, will first be demerged from AIPA and then be merged into Gabriel India. Now, and the other non-auto investments will remain with AIPA. Now, as part of this deal, Gabriel is going to offer 1158 shares for every 1,000 shares held in AIPA, and this deal is being done at an FY25 EV to EBITDA multiple of 8 times. Now, post this transaction, of course, subject to shareholder approval, regulatory approvals, and once that happens, the deal will take effect in the next 10 to 12 months is what Gabriel has said. And once that happens, the promoter shareholding will increase to 63.5% from currently 55%. Now, as part of their rationale, they have cited that they plan on doing this to transform the company, to increase its domestic and global presence, to simplify the group structure, and of course answer shareholder concerns on their product diversification and their M&A strategy, saying that they're creating value without any additional leverage or cash outgo is what Gabriel has said. Now, the street had a whiff of it because the stock was up 20% in the last 5 trading sessions itself, and post the news being out, the stock is up another 20% in today's session.
Thank you very much for that. And let's now get chatting about Apollo Hospitals and their plans to list the pharmacy and the digital health business. Ekta is here. Ekta, Street is clearly excited with this prospect.
Yes, absolutely. Well, Apollo Hospitals will be demerging its pharmacy, digital health and pharma distribution business to a new listed entity, which is for ease of understanding, named New Company. Now, the transaction involves 3 steps: demerger of the omni-channel pharmacy and digital health business, which is Apollo 24/7, amalgamation of Apollo Health Co., which contains Apollo 24/7 with the New Company, and merger of K-Med, which is basically their pharma distribution business, into New Co. Now, Apollo Hospital shareholders will receive 195 shares of the New Company for every 100 shares of Apollo Hospitals held. The New Company is expected to be listed within 18 to 21 months, and Apollo Hospitals will retain a 15% stake. Components in the New Company are Apollo 24/7, Apollo Pharmacies, K-Med, and Apollo Hospitals Telehealth Unit. The projected revenue, 16,300 crores in FY25, and targeting 25,000 crores by FY27 with a 7% EBITDA margin. The structure mainly removes the holding company discount. That's the reason you're seeing the stock react positively. Morgan Stanley has written on it. They have an overweight rating, target price 8,058 rupees. The New Company has aggressive revenue and EBITDA targets. If it meets that, it would generate shareholder value according to them. Citi has a buy. They say the development is positive for Apollo shares. They expect the discount to narrow with separate listing and a lean business structure.
Thank you very much for that. The mid-cap index is down about 85 points, snapping that 7-day winning streak. NMTC on the back of the price cut is down close to about 3%. It's breached the 200-day moving average, and Dixon Tech too, on the back of that downbeat note from a brokerage, has lost more than 3%. Get into a break. On the other side, we'll get you updates from the commodity and currency space with Manisha.
जिंदगी की हर छोटी बड़ी जरूरत के लिए आप जो सपने सजाते हैं, बस उसी उम्मीद को तो हम सहारा लगाते हैं। SIP आपकी सेविंग्स को आपकी खातिर काम पर लगाएगी। आज ही अपनी पहली SIP की शुरुआत करें। अधिक जानकारी के लिए अपने वित्तीय सलाहकार से परामर्श करें। LIC म्यूचुअल फंड द्वारा निवेशक शिक्षा की एक पहल।
म्यूचुअल फंड निवेश बाजार के जोखिम के अधीन है। योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें।
The world's largest accounting body, the Institute of Chartered Accountants of India, ICAI, proudly celebrates 77 years of trust, transparency and excellence. With Vishwasniya as the guiding light, the ICAI continues its march towards the vision of Viksit Bharat, shaping and powering India's economic growth. Join us in celebrating the 77th CA Day on July 1st at Bharat Mandapam, New Delhi from 3:30 p.m. onward.
दीप्ति अरोरा जी सिर्फ 38 साल की उम्र में एक बीमारी से चली गई। उनके टर्म लाइफ इंश्योरेंस के पैसे उनके बच्चे की पढ़ाई में काम आ सकते हैं।
पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 2 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 700 रुपए महीने से शुरू।
आपका और हमारा बहुत ही लंबा और करीबी रिश्ता है। हम उस चटकारे में हैं जो आप अपने दोस्तों के साथ लेते हैं, उस दराज में है जिसमें छिपा है माँ के राजमा चावल का राज। कभी आपके हाथ में अच्छाई की चमक बनकर आपका दिल जीतते रहे। तो अगली बार आपको कोई चीज पसंद आ जाए तो उसे पलट के देखिएगा, जरूर हमारा नाम दिख जाएगा।
ऑप्शन ट्रेडिंग की सोच रहा हूँ। सोचना भी मत, बड़ा पैसा चाहिए, बेचनी पड़ेगी कार, बिक जाएगा घर बार। डर गया, पर ऐसा कुछ होता नहीं।
शेयर इंडिया के साथ इजीली गवर्नमेंट सिक्योरिटीज, इक्विटीज और म्यूचुअल फंड्स के पोर्टफोलियो को प्लेज कर सकते हैं और इस मार्जिन मनी से बेफिक्र ट्रेड कर सकते हैं। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Welcome back. Let's talk about currencies now. Manisha is now joining in. Manisha.
Thank you for that, Rima. Well, the dollar index is on screen because that really has been a conversation as well, right? 11% of a decline in the first half of 2025 has been clocked in already. Now, this is the biggest half-yearly decline that we've seen since 1973. So this is the first time in 50 years that the dollar index has seen such a decline in 6 months period. This also is the worst first half decline in any year that we've seen since 1991. So clearly, dollar index making a lot of records there, and all for wrong reasons. Well, to begin with, it is the dovish US Fed outlook that the markets have seen pressure come in from. It has been about Trump's proposal on tax and spending bill, which hasn't gone so well with the markets there. And then apart from that, the European institutional investors and pen funds, reserves, all of them really seem to be selling dollar treasuries and buying into their own and other currencies, even gold for that matter, and that hasn't done dollar any favor. When you look at the Chinese markets as well, they have stepped up the sale of US treasuries. So every central bank in that sense, especially in the Asian and the European market, seems to be selling dollar as the treasury and dollar treasury bills as well. That is the reason you've seen that decline coming in. The other factor really is about the US fiscal trajectory. When you look at those numbers, then the public deficit has exceeded 6.8% of GDP. And when you look at the federal debt, well, that is nearly 120% of GDP, standing at a tall $36 trillion there. And even when you look at 2025, the US isn't really servicing that debt. It is rolling it forward, and that doesn't augur well. Is the reason you've seen CFTC data also tell you that the speculative long positions when it comes to US dollar also are net shorts, the highest in 4 years. So nobody is buying US dollar or the dollar index, and that's clearly seen in case of prices there. So even as the dollar index is trading at around 4-year lows, and we've seen 11% decline in that, this is what the other currencies are done. These are the major currencies. The euro is trading at a 4-year highs, Singapore dollar at a 10-year highs, Swiss franc at 10.5-year highs. You have the pound sterling trading at a 3-year highs as well. And then you have various of these Asian currencies where you have the Korean won, 37-week highs, 6-month highs for the yuan, 2-week highs for the Japanese yen, 8-month highs for the New Zealand dollar as well. So we've seen stronger gains come in for many of these currencies there. When you look at the moves itself, well, dollar index, as I said, is down by 11%. But in contrary to that, you're looking at euro up by 13% in the first half versus the US dollar. The pound sterling has gained up by 9.5% versus the US dollar in the first half of this year itself. And then you have the high-yielding currencies, the commodity currencies. And as you can see, it has been a 6, 9 and a 13% of a gain that Swiss franc also has put out. So we've seen very, very strong gains come in for this one. The Chinese yuan is gained up by 2.5%, and the best of the gains, a 10-year high for Singapore dollar, comes in with a back of 7% of gains for this year until now. The Japanese yen is up by 9% as well. So clearly, anywhere between 3 to 13% of gains is what we've seen in many of these currencies. Korean won is up by 8%. You have Taiwanese dollar gaining up 11%. It's only the Indian rupee, while we've seen a huge volatile moves and a big swing move come in for the Indian rupee for the first half. But we seem to be closing the first half only with very, very minor declines there. So a very flat Indian rupee, but that is relative to a very strong other Asian currencies that we've seen versus the US dollar till time.
Thank you very much for that. And that brings us to a close in this edition of Bazaar. Thank you very much for watching. Stay tuned. Chartbusters is up next.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ।
जन्मदिन मनाने के लिए किसी की परमिशन क्यों ली जाए? अपना घर तो अपना ही होता है जनाब। 36 सालों से हम आपको दे रहे हैं अपना खुद का घर होने का सुख। LIC हाउसिंग फाइनेंस लिमिटेड, घर बसाए रिश्ते सजाए।
कैंट आरओ देता है सबसे प्योर पानी और कैंट आरओ प्योरिटी दिखाता भी है, खुद ही देख लीजिए। कैंट का सबसे शुद्ध पानी पियो और हेल्दी रहो।
पार्टी हॉर्न्स भी होने चाहिए, मंगा लेती हूँ। खाकरा मंगवा लेती हूँ। थेपला भी मंगवाएगी। थेपला भी मंगवा लेती हूँ। अलग अलग मत ऑर्डर कर, एक बार में मंगवा। एफर्ट्स और पैसे दोनों बचा। सेविंग्स की विद्या तो कोई तुझसे सीखे। जब पैसा हो बचाना, फेडरल बैंक से रिश्ता बना।